We're live. Hello, everyone. I hope this is picking up audio. Hello. Are we audible? Are we audible?
Let me join on my laptop.
Yes, we're audible.
Oh.
Yes. Very good.
Excellent.
So, this is our first attempt in doing something live.
Yes.
In a very strange way. We're sitting inside a room, which is not our studio, because today being Good Friday, everyone seems to be off. So there's actually an office cricket match going on.
Yes.
So I wonder who is winning right now. So anyway, Shashwat, so you want to tell everyone how Italy is doing? Why don't you give us a brief about what you're studying and how the course is? Because everyone's curious, man.
Okay.
I mean, we're seeing you in Chennai after what?
After 10 months, maybe.
Yeah, 10 months. So
No, it's good to be back. But so for those who are wondering, I'm doing a master's program in economics and social sciences, mainly economics, but of course, social sciences is an aspect of economics. And I'm doing it in Italy, and it's been pretty good. I've been learning quite a bit, and I hope I can keep sharing what I learned with all of you back at home and all the loyal Be Rich supporters as well as MoneyPechu supporters. And maybe we should get started with that.
Yeah. So something that all of you have been wondering about is what's happening with the FIIs? What is this sudden interest in India? Because fundamentally nothing has changed in India. We're still doing the same thing. We're still in a K-shaped recovery. And after seeing what happened with Blue Smart, there's a lot more what you call landmines lying around us, thanks to what's happening in our economy, which is all going to slowly come. Some of it will come out, like how we had Blue Smart coming out. But that said, FIIs have been pouring money into India for the last 3-4 days. And long time ago, Shashwat did a video with me explaining, a lot of you had asked, what will make FII change their mind to come back to Indian shores? And we had said, either it has to be something profoundly amazing that happens in India, which will attract them. Otherwise, something profoundly terrible has to happen elsewhere for India, which is a failing student, suddenly becomes a class topper.
Yes.
So which case is it, Shashwat? Is it Indian economy has suddenly taken a U-turn which we missed? Or is it the question of we're the best out of the lot right now?
I wouldn't say either, because so maybe we should look at the facts of what's happened and what the effects are and stuff. So let's start with what the numbers tell us today. So the numbers tell us today that the Nifty 50 has posted an 8.44% 1-year gain. That is from April 18th, that is today, of 2024 to April 18th of 2025, we clearly see that the Nifty 50 has posted a roughly 8.44% gain. All of you who are watching now can quickly open another tab and fact check me and check for yourselves. Now, along with this, the S&P 500 over the past 1 year has put up a gain of 5.42%. So it would seem to us that India is performing better than the US. And given all that noise surrounding what President Trump is doing, and given that there's a lot of commentary about how India has been one of the stable regions in Asia, with the US and China duking it out, and Bangladesh with their political turmoil, and you have Japan with their own problems where they're trying to bring inflation back into their country again. So a lot of people are viewing India as the sort of beacon within the Asian subcontinent. Now, the point here is that if you however look at the INR against the US dollar, the INR has depreciated against the US dollar by 2% over the past year. So if you account for the fact that you lose 2% with your currency being an INR versus the S&P 500 being in dollars, the extra gain which the Nifty 50 has posted comes back down. Now, my question, which I'm asking myself, is you have one country that has a president who's basically doing whatever the heart chooses, and you have one country which is supposedly steady and following a set path. If both these countries have posted the same gain, then my question is, are we doing something equally as wrong as what is happening in the US, or what's happening? Because I don't see a reason as to why a country which is supposedly more stable than their US counterpart should be posting an equal gain to the foreign market, that is the US market. That's my first point. Second point is that if you look at the INR, which has depreciated against the US dollar, if you look at the INR, which is depreciated against the US dollar, the US dollar has actually depreciated against other currencies like the euro by over 6%. So this basically tells us that both the US dollar and the INR have been big losers. And amongst the big losers, INR has still managed to lose against the US dollar by 2% over the past year. So what is that telling me? That is telling me that it's not out of the virtue of us doing something great. There's something clearly going wrong there, and we are somehow underperforming in certain measures or equally performing in other measures. So I don't know what the fanfare is about. Secondly, there's been a resurgence. Domestic domestic investors are feeling quite optimistic now, slightly more optimistic than they were before a few months ago. There's a lot of money pouring back in, and the live title today is talking about that. So we're trying to figure out what happened. So this is something which I do for my own investing, and maybe we can run through this over here. So you have to make a pros and cons list of the positive cases and the negative cases. So one, what are the possible cases for stock market optimism for domestic investors in India today? If you look at the positive cases, one, there's been a 90-day pause. We all know this. There's been a 90-day pause with the US tariffs being levied on India, and there's a lot of hope that the personal bond which President Trump and Prime Minister Modi have with each other, they're going to be able to come to some sort of deal where India is going to be able to benefit compared to its counterparts. That's the first thing. Second, there is a very rocky relationship between the US and China right now. China has retaliated against the US. India has played it sort of cool. They realized that they don't want to provoke the US into a war with them. They realized that the US is doing this as a power play against China. They're not trying to actually attack India. India is actually not in the crosshairs of Donald Trump. So this is the second point. So there's an idea going around that India, before it was in China plus one, now it's China is out of favor. Let's cut out China from the deal. India is going to be the new China. So they're looking at other developing countries, and they're trying to figure out which country can be the new China for the rest of the world. So there's this clinging to the old order which is coming back in. Now, these are the two positive cases I can think of. And of course, if India replaces China, then the assumption goes that manufacturing growth will come into India, and we're going to export a lot more. If we're exporting a lot more, our economy, which is based off of export, so 17% of our economy comes from our exports. So if you look at IT exports, I think that covers about 7%, 7 or 17, I don't remember which number, but a pretty sizable percentage of our GDP comes from our exports. So the idea is that if we're able to export more, that's going to be very, very good for our country's growth, economic growth. So that's the logic. Now, cases for pessimism. Some cases for pessimism are that the US is India's largest export destination. At least the last I checked, the US was India's largest export destination. What do I mean by export destination? I mean, it's the largest trading partner where we have a trade surplus with them, which means that it's one of the largest trading partners where we are supplying our goods to them rather than buying their goods. So that is very significant. So the US is India's largest export destination, and the US economy is currently struggling under Trump. It's not a lie. Everyone knows this. Trump wants to expand the budget deficit. He wants to give a lot of tax cuts. He's not able to increase more revenues. He thinks tariffs are going to increase revenues, but it's very evident that tariffs aren't going to increase revenues to make up for the gap that's going to come in with the funding raise. He's already got Congress to approve, I'm pretty sure. So there's going to be a lot of inflation, and he's strong-arming Jerome Powell into cutting interest rates for him. And now, by ratcheting up the pressure, there's come to a point where Jerome Powell has now finally said, okay, if things really get bad, of course the Federal Reserve will come and step in. And there's another thing. Even if Jerome Powell doesn't do anything, 2026, Mr. Trump gets to reappoint the Federal Reserve governor, and he can very much take Powell out of power, and he can put someone who's more pliable. So the point here is that the US economy is going to have a lot of inflation. So with inflation, low growth, that's known as stagflation, and that's a very dangerous place for your economy to be in. Okay, so that's 1.1. Second point. Okay, so but if the US economy does poorly, that means that our IT exports go down, our exports to the US goes down, and the entire world economy takes a hit if the US takes a hit. It's just an unavoidable circumstance which we're stuck in. Because if the US goes down, we all go down with the US. There's no real choice with that we have.
Okay.
And the second point is, if India cannot negotiate a deal, which is very possible, Indian exports are going to be hit. And because Indian exports are going to be hit, what we'll end up seeing is that the economy is going to take a huge hit, because I just told you that exports form a large portion of our GDP. So if our exports go down, then that basically means that our GDP number is going to come down. And today we're seeing a lot of buying within India, because there's a lot of people within India who believe that they can afford the spare cash into the stock market. But tomorrow, if let's say 100 out of 200 people get a job cut or get their salaries cut, God forbid, get fired, they're not going to be putting their money into the stock market. They're probably going to take it out, because that's not volatility that they can handle. So I don't know how long Indian investors are going to be able to pick up the slack that foreign investors are putting down. And thirdly, DIIs are only as strong as the economy. And finally, the INR is probably going to depreciate against the US dollar. If the INR depreciates against the US dollar, it probably makes more sense for US investors or foreign investors to hold off on purchasing Indian assets, because there's an exchange rate risk. With Donald Trump in power, there's a huge exchange rate risk. We don't know which way the currency thing is swinging. If you look at the currency map over the past 2 months, 3 months, it's going up and down, up and down, up and down, seesawing. But over the long run, we do see a downward decline in terms of the INR versus the US dollar. Right. And finally, the Nifty, if people are asking me whether the Nifty 50 is overvalued today, the PE ratio is 21.68. It's neither overvalued nor undervalued. What this tells me is that there are some companies which are very overvalued, far beyond what they should be getting in terms of their valuation. And there are certain companies that are very undervalued. And a recent pick which we talked about, which suddenly has seemingly done very well after it had a huge fall, was IndusInd Bank. So we saw a 16% gain or something. Again, just because the stock gained 16% doesn't mean that nothing went wrong with the stock. But the point is that you have to be very careful while picking value. And sometimes it makes sense picking out of favor investments if you believe that fundamentally the company is still quite strong. So there are still value purchases to be made, is what I am able to gather from my analysis. So what do you think about all of this?
Well, my take on it is slightly like this. I think the way what as Donald Trump has unleashed upon the world has left the world quite confused and perplexed.
Yes.
Because some of the strongest trading partners, historically speaking, Korea, Japan, Canada, the European bloc, have been strong trading partners with Americans. And there have been unevenness or unfairness, if you want to call it, in the trading balance. But they've always seemed to find some way to work it out. And there is more to their partnership than economy.
Yes.
There is basically principles, ideology.
Goodwill.
Yeah, there is a cohesion.
Yes.
Trump has come and he has undermined all that. Basically said, questions democracy, questions rule of law, and all the questions he's raised has also been, one of them has been economics. So the world now has got a shock to its system.
Yes.
And I do believe we are in for a massive change. That there is no way to take a U-turn, like Howard Marks had written in his article, that the 80 years of the world we knew is over. We would love it if we can go back, but it's over. The band-aid has been ripped off. So either it's going to bleed or it's when something else is going to happen. But question of going back to the way status quo which was there, we can't. It is not like a 2007 or a 2008 crisis where the world ran together. That was also a man-made crisis. Unlike COVID, which is nature's crisis, in the terms of 2007, 2008, it was us over leveraging in the market and, unnecessarily taking on risk and risky bets. But the world came together under President Obama and everybody, Manmohan Singh at the time, and we weathered the storm. But this time around, there's also another man-made crisis. But here, the world is not coming together. Everyone seems to be sitting and wondering what to do. Everyone's become very tribal. And the faith in the American dollar, something which me and Anand used to laugh about. Even me and you used to laugh about.
We've written Hindu articles about
Yeah,
this.
saying this is impossible. It will never happen. But Trump is, because the only way it could have happened is the Americans made it happen. And Trump has made it happen. The faith in the mighty dollar has dwindled. And that is what forced him to turn his hands last 2 weeks ago when the bond market around the world gave him a slap on his face and said, dude, you think you have all the power? No, man. This works both ways. This is a synergy what me and you have. If you pull the plug on one side, the other side also shuts down.
I'll be very frank. I don't know why Donald Trump doesn't like his position. But
that only God knows. I don't think even he understands why he doesn't like his position. Because he keeps flip-flopping all over the place. So this has been a big shift. Now, when it comes to the Indian rupee and the dollar, we are very fortunate for the guys who are taken Indian loans. Indian corporates who have taken loans abroad, who have taken loans in dollars, they have a respite. Some of the respite is thanks to our RBI meddling, trying to keep the rupee safe. The other is Donald Trump has given a gift. So the rupee, from a momentum of going to 92, 93 like that, from 88, suddenly has slid to 85. I'm sure the RBI governor, Shaktikant Das, who left, and the current governor would have been wishing, why couldn't Trump have done this 2 months before? Two months before, at least would have saved us a few $1 billion. So I understand this. And the reason why I'm saying this is, this rupee strengthening and the dollar weakening, it's very different this time because if you look at gold, the way gold is surging, it has broken all barriers and it's running like a freight train. Because simple reason, in the past, like in 2008, people ran to the US dollars in times of uncertainty. The dollar was pretty much like gold. Because after what Nixon did, no one could buy, hold gold and so much. So everyone would buy US securities, dollars, and sit on it till the storm passed, then sell those securities and reinvest in the market looking for opportunities and bottom fish. This time what's happening is, instead of running to the dollar, everyone's throwing the dollar out the window because you do not know what Trump is going to do, and they're buying gold. Not only the reserve banks, you're talking about fund managers, they're not saying it outright, but the price of gold is reflecting that. This is just not Indians consuming gold or the Chinese Reserve Bank consuming gold. It's the world over, everybody seems to be hauling gold.
I think since 2021, it's gone up by 100%.
Correct.
That's a huge.
Yeah. So now, coming to why the FIIs are running to Indian shores. One thing everyone should keep in mind is the FIIs are not buying broadly in the Indian market. They've put $5 billion so far in the Indian market in the last few trading sessions, which is a lot of money in terms of dollars. But most of that money, a huge chunk of it, is gone into our banking sector. Where they have bought most of it is into banking. And you must keep in mind, this is the same time the Manappuram deals have happened, the Warren Finkers, those guys shoring up their companies in India is happening, the fusion, that is happening. So there's funds flow happening towards very specific companies. When you look at the FI data, it talks about who all entered India. There's a very famous thing when Indian tourism, especially when you look at Tamil Nadu, they say Chennai is a tourist destination for Americans, and we all celebrate this looking at numbers. But if you peel that number and really analyze it and see, most of it is just Indians coming back to visit their family. They're not staying in hotels in Chennai. They all come to Chennai and they stay with their parents. They go stay in their houses. It is not adding to the Indian economy, tourism economy. So they say lots of Americans come to Mabalipuram, but if you actually see, these are just returning Indians. You cannot go set up facilities in Mabalipuram thinking Americans are coming, tourists are coming. They happen to hold American passports. Same way, when you see the FII is coming by droves into India, you must understand where the money is going and why it's going. It is just not like them blindly believing in that the Indian economy is doing fantastic and they're buying everything right, left, and center. The main reason why they've been so focused on the Indian banking sector also is thanks to our RBI. It's easing the interest rate, increasing liquidity. So this is given opportunities for them. By throwing money in, they collect interest. They collect, opportunity is there. How that opportunity comes in banking sector, if you're a foreigner, is something maybe you can explain a little more nuanced.
Yeah. So first of all, when we're talking about the Indian economy performing well because the US is now having a rocky relationship with China, and that means that suddenly money is going to come into India and we're going to develop. We have to understand why over the past few decades that hasn't happened already, because the US has had a rocky relationship with China once before. So the question today is, why are we assuming that it's going to happen this time? Why is this time different? Some people are saying this time it's different because Trump has gone further than any US president has ever gone. Fair. He has gone further than every US president before. But my point is also that there are some structural issues in India which are blocking our transfer to industry. Yes, slowly we're trying to chip away at it. But the point is that our economy, our legal structure, the way we are structured doesn't lend itself very well to manufacturing. And simply because there are cheaper alternatives out there, where there are countries which aren't free democracies, where countries which don't respect human rights, countries which basically suppress wages, where capitalists can go set up their industry for cheap and produce. I'm not saying whether it's correct or wrong, but it's a fact. It's a fact that certain countries lend itself better to industry than other countries. But we have strengths which other countries don't. One of our strengths is the fact that we have a decent enough central bank with a very good, okay, not very good. What I mean to say is a very solid structure where we've basically created an RBI institution, and then we have the SEBI, and we have multiple other financial institutions surrounding it. Yes, there are arguments about how valid it is, whether it should be overreaching, so on and so forth. That's internal bickering. But the point is, for a country abroad, we look like a beacon of hope in Southeast Asia because we look like a country where democracy is still thriving, and a country where there is some law and order, rule of law, etc. Which is why our financial sector is the sector which is being picked. Because especially even with the Modi government, though there have been complaints about the Modi government in different angles, one thing which most people have not complained about with the Modi government is that he has, to a large extent, tried to push for foreign investment within India with varying degrees of success. He's tried to make it as easy as possible to have inflows into India. Now, at what cost is he doing this? All of that is a separate story. But as investors, to analyze what's happening today, we need to understand that yes, some of our financial organizations are set up quite decently in comparison to our neighbors. For example, you would not want to invest in a Bangladeshi bank today because of how overreaching their government can be. But investing in an Indian bank, yes, the RBI can be overreaching, like what they did with IndusInd Bank, where they forced a recheck and recalculation of all their numbers, which may or may not be good. That's up to you to decide. But the point is, India is still doing fine in our financial sector, and it's something no one can complain about as much. Yes, and surprise, surprise, that's one sector that's doing well. But my point is to assume that factories are suddenly going to open and suddenly we're going to pump out manufacturing jobs. There's going to be iPhone manufacturing everywhere in India, and we're going to have chip manufacturing in India. I find that hard to believe, at least right now. Until I see some more evidence, it's going to be a bit hard to believe. Some people say that we're being doomsayers. We're not being doomsayers. The fact of the matter is there are some things we're doing very good at, some things which we could do better at. The point is that we focus on value buys where we believe there's an opportunity coming up. And that's where we put our money in the long run, and we wait and we hope that our assessment was correct. and we hope that we're buying it at a fair value. Yes, 6 out of 10 times, there are some calculation errors and you make a mistake in your valuation. For example, out of the 5 purchases I made in the last 12 months, 4 of them went down in price as soon as I bought them. But the point is that they've gone back up in price. And is this just because it went down, does it mean I'm wrong? Not really. Does because it went up, does it mean I'm correct? Not really. The point is that I am only as convinced and convicted, or rather convinced and have conviction as much as I'm able to do my analysis and how further ahead I've thought about it. So my point is, if you're buying a company which you believe is worth 20 rupees for 10 rupees, I think there's not, even if the market still believes it's worth 8 rupees, as long as you know your analysis is right and you've taken care of all the possible ways in which things can go wrong. Like Charlie Munger says, the law of inversion. So when you look at a stock, you invert, you don't see how it can go right. There are many stories which we can conjure up of how it can go right. We invert and see how it can go wrong. How can the bet turn sour? And if you believe that you've taken care of all the inverted problems that you might have, then it may make sense to purchase it if the company is fair valued or under fair value. So this is the investment principle, and this is the Charlie Munger and Warren Buffett method of investing. Just because someone is objective and someone is trying to look at the numbers doesn't mean that we're optimists or pessimists, we're realists. So this is what I have to say about what we do.
Okay. Now, what Shashwat said is true. All these things about FII, what they're doing, and the DIs are doing, in some ways relevant, in some ways it's not relevant. If you're looking at investing within a 10-year horizon, these FII moves will be irrelevant. Like how last year's when they were going through a selling spree, now that is behind us. There's no point looking at it and analyzing it through any kind of lens because it's in the past. Same way, this FII current coming into India is also really not relevant when you're looking at investing as a small investor, as we do as retail investors, because we are investing very small amounts on a regular basis. So the way we have to take all this information is great. This means there's more volatility in the market. For a value investor, volatility is your best friend. The more Trump saber rattles, the more China resists having a conversation with him, the more confusion in our own markets domestically. It opens up opportunities because when the market gets nervous, they kind of throw out everything into the sink. So, like they say, don't throw the baby out with the bathwater. The market tends to do that. So, if you are patient enough and you believe and you've done your research, then you can think of investing in these companies you've been waiting for a long time in small tiffin coffee range, as we've been saying. But there is a caveat here. Like someone's asked me over here, what do you think about the healthcare diagnostics sector in healthcare? See, that itself, I have the problem when it comes to now what's happening with AI. An article came out, which I spoke about it with Dana, where a young kid in the US of Telugu descent has created an app which can, using AI and listening to your heart, up to a 96 percentile tell you if you have any abnormalities in your heart. I don't know. This is a news article. I've not seen the app. I've not tested it. But it does send thought in my head about where AI could come, how AI could change, and the implications of AI. So if you're thinking of investing in a company, how AI ready is it? Is the company you're looking at embracing AI? That is the biggest benchmark I would say you have to keep an eye on. Like Chandrasekhar said, Sir Chandrasekhar in his conclave in Dubai, he was telling all the Tata bigwigs, please hug AI, otherwise AI will hug you. Because simple reason, if you don't move with the trends, like the time when cars were being invented, if you were a horse carriage owner and you're a wagon manufacturer, if you did not think of manufacturing bodies for cars, wooden bodies for cars instead of carriages for horses, and you didn't pivot, you would have been wiped out. So in every sector which you look to invest, you have to analyze now, how will AI come to affect this sector? And AI can affect in ways which we cannot see right now. This is why even Bill Gates came out to say, I do not know clearly what jobs will stay and what jobs will go, because everyone keeps asking him, what should we study? where do you think jobs will be? Because it's still too turbulent the water to understand where it will all finally settle down. It will settle down, with any technology transition we have seen in humanity. This will become another tool we all use every day, like how we use lights, how we use calculators, how we use computers. AI will be another facet of our life which we'll be using. Doesn't mean human beings will not become redundant and we won't have any jobs. And it happens every time. We all feel that, oh my God, we're going to go extinct. It doesn't happen because without human beings using any product or any device, that device and product becomes obsolete. So AI is only useful as long as any human being is using it. And for a human being to use a product, it has to finally make economical sense. First, it is entertaining. Yes, no doubt about it. We all play with it initially. But then most of us don't even use it because we don't find any productivity in it. We're not able to use it productively. So they're trying to, it has grown ChatGPT from this first where it was initially to where it is now. It's grown tremendously. So if you're looking at investing, my advice would be more than to focusing on what Donald Trump is doing, more than focusing on what China is doing or what FIIs are doing and DIs are doing. My concern would be you try and see what is the future of your company which you're investing in 5 years from now, 10 years from now. Like cars. When I was talking to Dana in a video, I said cars will finally become like mobile phones. Like now, between a cheap phone and the most flagship phone, there's no difference. Specs are almost the same. So it really doesn't make sense buying a flagship phone, other than telling people you have a flagship phone. Like cars, buying a BMW and buying a Kia car inside Chennai, driving around makes no difference, other than people knowing that you have a BMW or a Lamborghini. And cars will go even transition further, that it'll just be a shell and it'll be finally based on the software which is running the car, which was case in point with Mahindra and Mahindra when they had an issue with their software and they got some bad press for that. The case of Tesla, they've also been having some bad press. And Tata Elxsi has tied up with a European company to do software for their cars. So it's going to become a more software driven, AI driven. So that space is going to change dramatically. So if you're looking at a auto sector, you're looking at a car company. Is that car company embracing AI? Are they moving towards integrating AI into their product line? How it integrates, I do not know. So this is where the ambiguity is for us as value investors. More than Donald Trump, more than the rupee movement, which is all transient and gives us an opportunity here and there. We can look at a stock which we did not, see if it comes into value. Like my brother says, the diamond needle becomes a normal needle for a while. That's about it. But in terms of, like Shashwat says, value buying, you have to really study the bottom. Where's the business? And like Charlie Munger said, see the worst case scenario, what can go wrong, instead of focusing on what can go right. What do you think what I said?
Uh, I am in complete agreement with you. And as far as AI is concerned, I think that we'll have to wait and watch and see what happens. It's very difficult, even for industry experts, to predict which direction it's going to take, where the next breakthrough is going to happen. AI progress has accelerated over the past few years because ChatGPT has been a very, very monumental proof in the pudding type situation where they've released a model out and they said, look at what we were able to do. And suddenly there was a huge amount of money that flowed into it because people realized that, my God, they actually figured out how to make a half decent AI to talk with. So before I remember how LLMs and large language models and generative AI. You had like a few robots on the internet, very niche. You went on it for entertainment, you chatted about it with your hobbies, and then that's about it. And then suddenly you have this thing solving math equations for you. I mean, remarkable. But the point is, we don't know where it's going to go. And like you
One thing
said,
I want to add to that is,
yeah.
so even there, if you see, when these first AI models came out, they said you need a lot of high-end processors and very powerful processors to do this, which pushed Nvidia to astronomical, galactic prices.
Yeah.
But that has been disproven now by the Chinese, and there's some Indian companies also now, which are able to create that kind of language learn AI at a very low cost with old processors, not so powerful. So now we have to question: do we need an Nvidia? So there itself, see, this is what I mean when I say we say, yeah, we need Nvidia, we need AI, But now, in terms of processing power, does every single processor have to be an Nvidia? Is a question. Yes, we do need Nvidia for some high-end work, for servers and cloud and all that. But for every single AI, does it have to be an Nvidia? Is a question which we are left pondering now after seeing what's happened.
And I have one question for you actually. So you started seriously taking up investing where you're like looking at prices and you're looking at valuations almost on a daily basis for the past, let's say, 10-15 years. So my question is, from when you took it very seriously, like when you started taking it very seriously to this point, do you feel throughout your journey in the 15 years that anything has fundamentally changed from when you started to today?
Fundamentally, investing has not changed. Because fundamentally, what we're trying to do is we're trying to pick a business which makes sense to us, which we can understand, or at least that's the way I see it, which I can understand. And I feel is it a fair price for me to invest in? And then I try and track that business and see if it's growing as an investor, as a business owner, if it makes sense what the management is doing. So that is fundamentally what investing is. And if you keep that in mind, nothing changes. Even with AI, nothing changes. It's just new products, new business models, which you have to try and get competent in and study and learn. The biggest problem I see with young investors nowadays is they don't want to learn and study what the new business is. They just want a quick answer. And there are no quick answers. I've suffered because I tried to do that when I was much younger, that I try to just do quick answers. Like arguing, saying, let's just buy a Trent. Who cares? Trent is, it's a Tata company. It's a great company. It's corrected 20% already. So why shouldn't we just buy it? Even if it goes a little further down, doesn't matter. I'm still owning Trent. That kind of attitude doesn't help. I've had that attitude, and I've lost money trying to do that, because when it might be a great business like Charlie Munger said, but if you buy it at a terrible price, it doesn't make sense.
There's a Howard Marks quote, which I think we've talked about many times on this channel, which is that no asset is a great asset at all prices, and invertedly, every asset is a good asset at some price. So you're right, but the point I wanted to highlight was the fact that you have to hear the words from the source. He has said that over the past decade and a half, not much has fundamentally changed. And the reason why I picked the past decade and a half is because the past decade and a half, there has been a lot of changes in terms of technology. There's been changes in terms of the world order. Like, for example, from the 90s till the mid 2010s, not much of a change in terms of the world order. You still had the US as the one who was backing the entire world in terms of their currency, the reserve currency. You had the normal post-Cold War alliances, which were still roughly there. Yes, China was sort of easing up, and we were having a global economy, and slowly there's a bit of anti-China-ness which was going on in the West. But my point is that over the past 10-15 years, things have dramatically shifted in terms of geopolitics, etc. But today, when he wakes up, I bet that he is still following the same practices that he was when, 5 years ago, 10 years ago, when he was, becoming an investor, which is that you wake up, look at what prices there are, what opportunities there are. It's like entering the vegetable market, figuring out which seller is giving you a good price and trying to pick up what the most fresh vegetable is at the best price. Isn't that what we do everywhere? We don't care whether, some farmer in Punjab is fighting with another farmer across the border. I mean, yes, okay, it's good in the sense that we get 1-2 rupee price differences and stuff, but the fact of the matter is, us as investors are still waking up every day trying to make more money than we started out with. And the fact is that even if you don't get AI, which I'll be very honest, a lot of AI is, even though I've done a computer science minor and I'm doing something which is heavily computational, a lot of AI is still a mystery to me. And I've talked to quite a few industry experts who tell me that, yes, I understand my field, like my, line in which, my vertical in which I'm working. But I'll be very honest, if you move 2-3 divisions across the board, I have no clue what they're working on. So how are investors, expected to know everything about everything?
It's true. I mean, to buy an automotive share like Tata Motors, you don't need to know how the IC engine works. In principle, yes, but you don't have to get into the nitty-gritty. That I do agree. You can't really deep dive, but you should keep some kind of idea behind it.
You have to have the pulse.
Correct. And there are some interesting questions some of you are asking. I think we'll answer some of these questions. Sure. Karthik is asking, why IDFC First Bank issued preferential shares to Warburg Pincus by diluting the existing shareholders. Will it impact the EPS as this will increase the shares? First of all, Karthik, good question. We don't look at EPS in banks. We focus more on the book value. And in this case, it is good that they're able to find someone to add more funds into the bank. That gives confidence as an investor that the bank is able to raise these kinds of funds. If it's issued through preferential shares, okay, so be it. Yes, it does affect the share price, yes, because there's more shares now. But at the same time, as an investor, you can take it as a vote of confidence and not, I would focus more on who's running the bank and is there any other problems in the bank. If someone is willing to invest in the bank, I think it's a good thing. And this also, I think, this around the same line as what Head It Home is asking, saying, as for dilution of shares is concerned, should we be worried? I'm not because of equity additional to the bank. Is it the right way to look at it? So that's what my fundamental answer would be. In terms of banking stocks, you have to look at it differently compared to how you would look at FMCG or anybody else. Because a bank basically what it does, it takes money and it rotates the money and makes more money. It's just in money lending business in the simplest forms. All other businesses, when they raise capital, it could be for other reasons. They could be raising capital to close a loan. They could be raising capital to make fresh capital investment. They could even be raising capital to pay out dividends, and fluff up their books. So there it does make a concern. But in terms of banks, it's slightly different is what I would say. What do you think, Shashwat, from what I'm saying?
Yeah, I think you hit the nail on the head in terms of the cost of borrowing, which is what we should be looking at. If you look at a company, there are multiple ways in which it can raise cash. One, it makes money through retained earnings. Two, it can raise capital on the equity markets. Three, it can issue debt. Four, it can borrow from another bank. IDFC is a bank which has issued debt. It has borrowed from other banks. It has issued equity capital. But the choice between which option you pick to raise capital completely depends on, ceteris paribus, that is assuming all things are all else is like remaining constant. The decision comes down to where your cheapest cost of borrowing is. If today IDFC feels that their shares are valued above what they would, that is valued above more than what they feel is fair enough, they might sell more shares during this time in order to raise more capital at a higher valuation. This is something that happens. This is equivalent to if you were the person who had a company and you had a choice that you needed the capital, maybe you see growth opportunity, whatnot. You have three options: retained earnings, you have debt which you can raise, or you have equity which you can sell. Obviously you're going to be a decision optimizer and try to figure out the way in which you can get the lowest lending cost. So this is the way I would view it. And as for EPS and book value concerns, I think you should take the time to read through what the deal is and what the preferential share agreement is, because each preferential share agreement has a different T&C, there's terms and conditions. So you should look at it and pour through it with a fine comb if you are an IDFC bank investor, because then you'll get a fair idea of what they've issued and what it's impacting. Because preferential shares, the standard is that they have the first right to claiming dividends over other shareholders. Like,
depends on the preferential share.
Yeah, depending on the preferential share. So even that is sometimes like neglected, and preferential shares can mirror an ordinary equity share.
Yeah.
And preferential shares are convertible at times. Yes. So you can convert preferential shares into debentures or other asset formats.
Correct. But in this case, I think it's just purely capital infusion. These preferential shares are being just sold at a certain price for capital infusion. I don't think there's a dividend quotient in this, nor do I think there's a conversion quotient. But I have not read the document, so it will be very unfair of me to pass this. But usually in India, this kind of things are done for capital infusion, especially in bank levels. We have not really done this kind of trades in India, debentures and all that, for quite a long time. Companies don't do that in India because it's much easier ways to raise capital in India right now.
If this is something there's interest in, maybe we could take a look at it and get back to you with the details.
Yeah, we can do a detailed video on this.
Yes.
On professional shares, especially this one. what was the deal, and break it down for you guys. There's another question Rampak is asking, which has been asking quite a few times. Let me answer it, which is, should I wait for gold to correct or buy it now? I have to buy around 60 grams for marriage. Okay, Rampak, let me tell you something. Why are you asking this question? Because this gold you're going to buy for marriage, it's never going to be sold. I went to buy my wife a box, silver box, and the guy in the store said, "Sir, you're buying it at the right time." This was a few months back. He said silver prices are going to go up and its value is going to go up. I said, "Boss, if this goes to 1,000,000,000 100 rupees, it makes no difference. Or if it becomes zero, it becomes makes no difference to me, because I'm gifting this to my wife. My wife will never sell it. It's priceless." So when you're buying for your marriage or someone's marriage, your daughter's son's marriage, this 60 grams of gold is an investment in their life forever. So my advice would be, if it is for marriage, don't overanalyze it, right? You cannot time these things, because eventually whatever gold you buy will appreciate. They're not going to sell it. Like my grandmother's Mangal Sutras with me is being passed down from my dad, my mom have passed it down to me and is sitting with me. I'm never going to sell it. I don't even know how much it weighs. I don't even know what its value is, but I will never sell it because it's priceless. So keep that in mind. Now, in terms of gold.
I think they want you to speak a bit louder.
Okay, sorry. In terms of gold, buying gold as an investment, I would say still maintain this 5 to 10% of your portfolio should be in gold. More than that, it does not make sense. Even in this current market, it does not make sense. Just because you're seeing gold surging doesn't mean you should be buying. Because just a few weeks back, gold went back to 2,900. A lot of you are panicking, saying, "Anand, you got it wrong. We have lost." Now it's 3,300. All of you are singing, "Anand, you are such a genius. You got everything right." So I find that very funny, because it is not an investment class. It is a hedge. And like I shared in Instagram, if you have been doing Tiffin Coffee from beginning, from January 1st till now, your gold value is up almost 20%. And that should give you some kind of sense of calm, because if you had been putting 5%, like I've been saying, out of your daily Tiffin Coffee, averaging it 5%, that gold will be making you feel better. If the rest of your portfolio is not looking like it's shining brightly, it's still gold would have helped you average it all out and make you feel better. And gold, that's the only point of it. In a situation where things are terrible, it's a hedge. It will not do anything more than that. If you have even a lump sum, do not invest it in gold. If you have a lump sum, invest it in a corporate bond, a good secure bond, and then take the interest which you get from that and buy equity shares at different coffee range. That is how you'll build wealth over a 10, 15-year time. Buying gold, hoarding gold is not going to create massive amounts of wealth. It will create wealth,
Yes.
but it will take much longer, and it will not be what you imagine it to be.
And gold, after a certain point, becomes a headache to
store.
to store. So, are there other questions which we could take up?
These are very stock specific, which we can't talk about. They're
Sure.
asking like Supreme Industries, and they're talking, which we really should not. It's irresponsible for us to get into those.
Yeah.
Anyway, companies which I do see here in the list, I try and get Shashwat to do some research before he heads back to Italy and talk about it. A lot of people are asking, who missed out in the beginning, what is the name of the course you're studying?
Name of the course is Economics and Social Sciences. I don't know whether I'm at the point where I'm going to disclose the university. I'm sorry, Mr. Prem Cruz. I know you've been dying to know, but maybe not today, maybe a day later. But yeah, Mr. Prem Cruz is again asked.
Yeah,
Yeah.
it's okay, I understand.
Yeah, but Deepak M has asked suggestion for girls' education / marriage investment. So assuming that your daughter is quite young, then I'd suggest what my older uncle did for his niece and what my uncle is now doing for his daughter, which is basically SIPing small amounts every month on month, consistently, increasing it at whatever rate which he's able to, and you're SIPing it in the Nifty 50, and then maybe if you have the means to, you can do it in the S&P 500 as well. But the point is that you keep SIPing it, and over the next 15 or 20 years, assuming your daughter is very young, she's going to have a lump sum of money to cash out and pay for her college tuition, or even if she cashes it out and she pays for her marriage or whatever it is that your aim is with this money, it's possible.
No, at the end of the day, when she's an adult, she'll decide what she wants.
Yeah, and
this is a wonderful thing.
My uncle invested 1,000 rupees in, I think, 1998 or 1999, and that 1,000 rupees has now, like 5 years ago, it burgeoned to like something close to like 40,000 something rupees, and today I don't know what even that price is. But the point is that you don't underestimate the power of compounding, and especially a long runway. So yeah.
And the last thing which I want to tell Vijay, if 10% of your portfolio is gold, you have enough gold, man. Okay, don't worry. I know looking at other stock prices going down, you feel like kicking yourself saying, I should have bought more gold or I should have only bought gold. All of us go through it. It's very human. And we like to get angry with everybody and think everyone's giving terrible advice. It'll pass. When the markets recover, given time, it'll pass. That's why I did that ITC video to show you. If you had been buying ITC over 15 years, one share every day, how you'll see your portfolio when you open the app, how you'll be seeing it in the red and how you'll see it in the green. You'll see it in the green at 50%, 60%, and suddenly within weeks it'll go back to -8, -3%. So it can be a roller coaster. My advice is not to over stress. Remember, as long as you have been investing wisely in the right companies, it'll all work out fine.
Yes.
Anyway, I think we should.
We can end with Vibhav Rajan Subramanian's question.
If I have 10 lakhs that which is needed in a year, can I invest it in gold or FD, or how can I? If you have 10 lakhs, you need it in a year, boss.
FD, or like don't like do anything with it.
Yeah, do not buy gold.
Don't buy.
Please do not buy gold for 10 lakhs.
Up and down.
Yeah, yeah. You can, if you need it within a year, please keep it liquid.
Yes, you'll feel
even bond. Yeah, you can buy a bond for 1 year, but if you do not buy the bond from the right place, you will not be able to sell the bond off at the right time. That is the biggest problem with bonds.
Keep it liquid.
Bonds are not liquid. It's like buying a small cap, buying a bond, even if it's a great bond.
Yes.
It can be like the gold god bond of all bonds. But when you want to sell it, you need to find someone who's willing to buy it off you.
Because simply it's like a large sum of money which people have to put into it.
Correct. So if it's a 10 lakh bond, you can imagine 10 lakhs is a vast sum of money for most people. So
it's like selling your car.
Correct. You will not be able to find it. Then you'll have to discount it terribly. And then you'll feel very cheated. Like if you have tried selling anything in OLX, you'll really know what lowballing is. Yes. You'll put up your old iPhone hoping to sell it for 15,000 rupees, and you'll get a first message saying, I'll give you 500 rupees. And you feel like saying, oi. So please be careful out there. Anyway, thanks for watching the video. It was nice to do a live session. And the first one with Shashwat we have done. We'll try and repeat some more. Maybe before he goes, we'll try and do. Otherwise, also that we record some videos with him. And anything else you want to add, Shashwat, before I sign off?
No, a lot of positive comments here, and some not so positive, but thank you for those too. But generally, I'm very thankful for the audience who's been able to join us on short notice today at 5. So thank you once again for joining me and my uncle for this live. So yes.
Yeah. So thank you again, guys. We wish you a wonderful weekend. And it's a long weekend. Those of you who managed to join us, I'm happy that you could. Hope you managed to rest and recuperate. Whoever's gone on a holiday, a short sojourn from Chennai. It's very hot in Chennai. It did rain a few days ago. That was a bit of a relief. But anyway, we'll be back at it on Monday morning. Markets opening. And we'll have a full week, 5 days of investing opportunities. And let's see what Mr. Trump and Mr. Xi Jinping offer us going forward. Thank you for watching Bearish today. Have a wonderful day and have a wonderful evening. Thank you.
Thank you.